So in the yesterday's video, I discussed about the technicals. So as we have been discussing, whenever we look at a stock, I do three kinds of analysis: comparative analysis, technical analysis, and fundamental analysis. I have done one video day before yesterday on comparative analysis. Yesterday, I did a video on technical analysis. Now I want to talk about fundamental analysis. How do you determine whether a stock is fundamentally strong or not? So this is computer age management. Let me go to MarketSmith. This is for students in India. I will also look at stocks where if you are trading the Nasdaq market or the NYSE market, how do you look at fundamentals? Okay. So first, for the Indian students, let me go to MarketSmith. I will sign in here. So let's go to CAMS. It's a very famous company in India because it was showing good characteristics, technical and comparative. Comparatively not great, but technically it was showing good setup. See, it is still in the base. So if I expand this, click on consolidated. Now have a look at this. Four things I look for in fundamental analysis: the sales growth, the earnings growth, return on equity, and margin expansion. So if you see this stock, the EPS growth last 3 quarters, see double digit growth and accelerating growth. So 38, 41, 44. So this is what I expect from a stock. Recent 3 quarters, there should be growth, and not just growth, but accelerating growth. Okay. So if this was 38, 22, 12, that is decelerating growth. The growth is still there, but it is decelerating growth. I prefer accelerating growth, at least for the past 3 quarters. Similarly, you see sales growth 25, 27, 33. Double digit growth, accelerating growth. This is ideal for us. Okay. Sales growth, EPS growth, preferably in the double digits and preferably accelerating. Okay. So, two factors. Then you have this return on equity. This should be minimum 17%. This is as per William O'Neill's book. He found that growth stocks which gave huge returns, they already had minimum 17% return before they began their huge advance. So that number should be more than or equal to 17%. And regarding margin expansion, you go to scroll down, you go to annual key ratios. Okay. After tax margin, you see this in 2012, what was the margin? 18.53%. Now it is 30.88%. So almost doubled. The margin has almost doubled. Okay. So this is called as margin expansion. So not only is the company selling more of its products, it is also able to keep more of the increased sales as profits. So let me repeat that statement. Not only is the company able to sell more products because of the sales growth, but it is also able to keep more of that increased sales as profit because of the margin expansion. So imagine what will happen to the earnings. The earnings will just explode. Okay. That is why you see here the growth in earnings is more than the growth in the sales. It's because of margin expansion, because sales multiplied by margins is equal to EPS or earnings. Okay. So these are the four things I look for. Now, will you get all four in your favor? Probably not. Sometimes earnings is accelerating, sales is not accelerating. Sometimes earnings and sales both are accelerating, but you don't have return on equity of 17%. Okay. Sometimes you have return on equity in your favor, sales and earnings in your favor, but the margin is not expanding. So out of four, try to get three in your favor. Okay. If three are in your favor, it is a strong, fundamentally strong company. If all four are in your favor, which in this case is true, then I would say the company is very strong. So there is a difference between strong and very strong. Just like we do comparative analysis, we look at price strength, we look at accumulation distribution, we look at group rank, and then we look at improvement in group rank. So, four factors. Out of four, if three are in your favor, that's a strong company comparatively. Out of four, if all four are in your favor, then it's a very strong company. Okay. This is important. See, you need some way of measuring, you need some rule or some guideline that can tell you whether a company is strong or very strong or weak. Okay, some guidelines. So I normally take three, four variables, and if majority of the variables are in my favor, I consider that as strong or very strong. That is my style of analysis. I don't go deep into, the number should be at least 25% or the sales should be at least uh, 20%, whatever. I don't put those kind of filters. Okay. I'm just looking for a double digit growth, and I'm looking for accelerating growth. Preferably, I'm looking for return on equity more than 17%, preferably, and margin expanding. Now, how much should the margin expand? Should it expand by 50%, 100%? I don't go into that. What should be the look back period? Should I look at margin 3 years ago, 5 years ago, 10 years ago? Nothing fixed. Okay. So, in fundamentals, there is some gray area. There are no fixed rules here. In trading, there is no black and white. Okay. You look at three, four variables, which are the key variables that make a stock price go up. Okay. And then you focus on them. The more the number of variables in your favor, the better is the probability of the success. Have a look at this. 2017, the EPS was 21.51. 2024, it is 72. This is common sense. I mean, the EPS has gone up like 200, 200, 300% in how many years? In like 7 years. That's fantastic. That's a fundamentally strong company. Okay. Plus, it's profitable. Its margins are improving. What else do we want? Okay. So these are the things that I look for to determine whether the company is fundamentally strong or not. So now you know, if you look at the three videos that I have made, comparatives, technicals, and fundamentals, watch these videos carefully. This will help you categorize a particular stock before you put it on your watch list. This will help you categorize stocks. You will know what you are getting into. One thing we have not covered is the business itself. We have just looked at comparative, technical, and fundamental analysis, but we have not gone into what is the business of the company, or what product or service does it sell, what is the track record of the management. We are not looking at all of those. We are not investors. We are traders. We are looking at like 700 stocks per week. If we sit down to analyze each and every company, okay, it is going to take us a lot of time. We don't have that much bandwidth. We look at certain key variables, we take the trade, and once we are in the position, then it makes sense to increase our knowledge about the company, because now we have a stake in the company. So the more we read up about the company after we already have a profitable position in the company, the more will be our confidence to stay in the trade. Because as I said earlier, as far as trade management is concerned, that is where trading becomes a art rather than a science. See, we need three skills to become a professional stock trader: stock selection, trade execution, trade management. As long as you are in stock selection and trade execution mode, that is a science, that is more or less mechanical. But the moment you go into the trade management department, okay, that is where trading becomes an art more than science. Okay. Now, for the US students, people who trade the NASDAQ market and people who trade the New York Stock Exchange. So let's go to Miller Industries. This is a stock that one of my students bought recently. I made a video on this. So if you click here, click on financials, go to statements, see, you will see quarterly growth here. Recent 3 quarters, see double digit. Now, this is not accelerating, this is decelerating. Okay. But still, it is double digit growth. The company has been growing since so many quarters now, at least 10 quarters I can see here. You go to net income. Net income, if you see latest, there is a problem. Before that, it has been growing. So, net income is not in our favor. The sales are not in our favor. It is declining. So this is not a great company as far as fundamentals are concerned. Go to statistics, click on annual, look at net margin here. It was 2.66 earlier. Now it is 5.05, 4.91. So it's almost doubled. So margin expansion is there. What about return on equity? See, it has gone beyond 17% recent years. Okay. So margin expansion is in our favor. Return on equity is in our favor. Sales growth, earnings growth, latest 3 quarters are not in our favor. But still, I would consider this as a positive stock, a strong stock, because sales there is growth, although it is decelerating, but still there is double-digit growth. And there is latest quarter, there is earnings. That's an alarm sign. Latest quarter, see, that's a alarm sign. So we need to watch out for this kind of a stock. It is a strong stock fundamentally, but not very strong. So this is my analysis for NYSE and Nasdaq stocks. These are the 4 things you look for. Plus, if you're interested in more understanding about the company, go to statements, click annual. Okay. Now check what were the sales of the company 10 years ago? 400 million. Now it is 1.15 billion. That's like your sales have doubled in 10 years. Okay. You go to net income. This is what was your net income? 9.2 million. What is it now? 58 million. So your sales have doubled. Your profits have gone up 6, 7 times in 10 years. That is how you look at the broader macro picture. 1 or 2 quarters here and there is fine. But if you look at the macro, the sales has doubled, the net income or the profit margin, net profit has gone up 6 times, 7 times, and the margin has expanded, and the return on equity has gone from 5% to 17%. So, overall, if you see the broader picture, we have a very strong, fundamentally very strong company. If you look at quarterly, we have a strong company. Maybe it's going from very strong to strong. We can see those early signs in the quarterly results. Okay. So we have to be cautiously optimistic about this. I'm using 2 terms which are very contradictory. You have to exercise caution and you have to be optimistic, because this company has shown promise in the past. It could do so in the future, but at the same time, you have to be cautious because the latest quarter does not look promising as far as net income is concerned. So these are the things that you look for to determine whether a company is fundamentally strong, fundamentally very strong, or fundamentally weak. Okay. That's what I wanted to cover in today's video. I hope you liked this 3-part video series. Always, whenever you look at a stock, please do 3 kinds of analysis: comparative analysis, technical analysis, fundamental analysis. And please send me your questions, doubt, clarifications. I will help you in that. And do not forget to download the swing trading checklist, position trading checklist. Then I have created a stock categorization checklist. I will also create a webinar, a pre-recorded webinar where you can go through what are the things that I look for on the chart before I put the stock on my watch list, before I take it into consideration, before I put it on my radar. Okay, I will create that like 30 to 45-minute webinar. It will be free. I will put the link in the description box, not in this video, maybe in some later video. I have not prepared it yet, but I will have to work on it. I think it will help a lot of subscribers. And all of you keep sending me comments, likes, shares. You also keep sending me emails. And you must have noticed I quickly reply to emails. If the question is genuine, okay, I quickly reply to that email with a voice message. Generally, I don't have time to type. So I quickly reply with a voice message, even on email. Okay. And there are some subscribers who got in touch with me through my WhatsApp. So WhatsApp becomes easy to send a voice text. But anyways, watch these 3 videos twice each. Okay, a lot of analysis has gone into this. So I hope this will help you. Thank you so much. Have a fantastic day. Thank you so much for your time again.